The stock market in 2025? A roller coaster. Some of the biggest players are stumbling, and the headlines are screaming doom. But is this just noise, or is there a hidden opportunity? Instead of panicking, smart investors focus on companies with strong fundamentals, steady growth, and long-term potential. That's exactly what we're doing today. I'll break down 5 high-potential stocks that could set you up for success this March. And trust me, you don't want to miss stock number 5. It could be a game-changer for biotech investors. Let's dive in. Number 1. Nvidia, ticker NVDA. Nvidia just dropped jaw-dropping earnings. Yet the stock tumbled 8.5%. That's right. Despite revenue growing 114% year-over-year and data center revenue up 16% in one quarter, investors focused on one thing: gross margins falling from 78.4% to 70.6%. But let's step back for a second. Nvidia remains the undisputed leader in AI chips. Microsoft, Amazon, and Meta are pouring billions into AI, and Nvidia is their top supplier. Its earnings keep soaring, yet its forward price-to-earnings ratio is lower than Tesla and Broadcom. Yes, some worry about margin compression and slower growth. But even if Nvidia's growth rate drops by half, it would still outpace most mega-cap tech stocks. Beyond AI, Nvidia is expanding into autonomous vehicles, robotics, and cloud gaming. Its AI chips power everything from ChatGPT to self-driving cars, giving it an edge in multiple industries. So, if you believe in AI's future, this short-term dip in Nvidia's stock could be your golden buying opportunity. But before we proceed to the next stock, here's something to think about. If you could only invest in one sector for the next 5 years, would it be tech, healthcare, or energy? Let me know in the comments. Number 2. Micron Technology, ticker MU. You know the saying, be greedy when others are fearful. And right now, Micron is one of the most overlooked stocks in the AI boom. Everyone talks about Nvidia, but here's the deal. AI servers need memory chips, and Micron is one of the top suppliers. Demand for high-bandwidth memory, HBM, is exploding. But Micron's stock has lagged behind the market. That makes no sense. Micron is growing fast, yet it trades at just 8.4 times forward earnings, a steal compared to other tech giants. Micron recently announced a $15 billion investment in new chip fabs to meet the growing demand for AI and cloud computing. This isn't just about short-term growth. This positions Micron as a critical supplier for the next decade. AI is still in its early days, and as models get bigger, they'll need more powerful memory chips. That puts Micron in prime position for long-term growth. Number 3. Airbnb, ticker ABNB. Since its 2020 IPO, Airbnb has struggled to gain momentum. But here's the thing. Beneath the surface, Airbnb is stronger than ever. The company pulled in $4.5 billion in free cash flow last year, with an operating margin over 20%, outpacing most competitors in the travel industry. Even better, Airbnb is rolling out major platform upgrades in May 2025, designed to boost host participation and improve guest experiences. These updates could expand its business beyond short-term rentals into premium experiences and long-term stays. There are risks. Regulatory crackdowns and an economic slowdown could impact travel demand. But if Airbnb successfully expands its ecosystem, it could unlock massive new revenue streams. If you're looking for exposure to the travel sector, this could be a prime time to buy. Number 4. Enterprise Products Partners, ticker EPD. If you're looking for stability and passive income, Enterprise Products Partners is one of the safest plays in the energy sector. Unlike oil producers, EPD is a midstream company, meaning it earns money from transporting and storing oil and gas, not from fluctuating oil prices. Right now, EPD is investing $6 billion in new capital projects, which will fuel even more cash flow in 2025. Even better, the company has increased its dividend for 25 consecutive years and currently offers a 6.4% dividend yield, one of the highest in the industry. There are risks. Potential oil tariffs and the shift to renewables could impact its long-term outlook. But with stable contracts and a track record of growth, EPD remains a rock-solid choice for income-focused investors. Number 5. Vertex Pharmaceuticals. Ticker: VRTX. Vertex Pharmaceuticals is on a massive winning streak. Since December 2024, the company has secured 2 key FDA approvals, boosting its revenue by 16% year-over-year. The first, Alyftrek, is a once-daily cystic fibrosis drug that's more convenient and more profitable than Vertex's previous treatments. The second, Jurnav, is a non-opioid painkiller, the first of its kind approved in over 20 years. But that's just the beginning. Vertex is also ramping up its CRISPR gene editing therapy, Casgevy, a potential multi-billion-dollar solution for sickle cell disease. Beyond that, Vertex has a powerful pipeline with late-stage drugs targeting diabetes, kidney disease, and even a potential cure for type 1 diabetes. With a strong track record, a booming pipeline, and a market-leading position in genetic therapies, Vertex Pharmaceuticals is one biotech stock investors can't ignore. Looking at the numbers, it's clear that each of these stocks brings something unique to the table. Nvidia continues to dominate with an enormous market cap of $2.7 trillion and a staggering $130 billion in revenue, backed by an impressive 74.99% gross margin. Micron Technology, while much smaller in comparison, still maintains solid financials, with a $99 billion market cap and a respectable 30.92% gross margin. Airbnb, a tech-driven hospitality disruptor, stands out with a high gross margin of 71.54%, despite generating only $11 billion in revenue. Meanwhile, Enterprise Product Partners appeals to income-focused investors with a substantial 6.3% dividend yield, balancing its lower gross margin with stable cash flow. Finally, Vertex Pharmaceuticals proves that biotech can be highly profitable, boasting an 86.07% gross margin and a growing market presence, even as it navigates the complexities of drug pricing and approvals. Each of these companies operates in a different sector, yet they all demonstrate strong competitive advantages. Whether it's tech, biotech, or energy, the market rewards innovation, scalability, and strategic positioning. So, which of these stocks do you think has the best long-term potential? Let me know in the comments. And if you want to learn how to unlock financial freedom, check out this video next. If you found this video valuable, hit that like button, subscribe for more investing insights, and remember, this is not financial advice. Always do your own research before investing. See you in the next video.